All right, so here's a J signal this morning. Here's crude oil. We got the trend change. Got the trend change here. Started out, trend change. You get the red triangle. We take the first retracement back up. That's a bullseye. Same exact two trades yesterday that nailed oil. Is over $800 per one contract on one trade. $400 per one contract on another trade. We're just like this in the morning. Same exact setup. There's your retracement. There's the bullseye high. Works in all markets the same way. Look at that, how that nailed the high. Came down, came down. What I'm going to teach you guys is you don't want to take divergence against trend. See these divergence dots on the way down? That's based upon this oscillator below. You don't want to buy blue dots. You don't want to buy divergence. That's for retail traders. Retail traders are not knowledgeable how to trade the market. Okay, they get all these books online and they get educators that don't know what they're doing about divergence. You only take divergence with trend direction. Only take divergence with trend direction. Here we got a pullback. Again, pullback. Wanted the J signal to fire there. We didn't get it, but we got the divergence signals. That even nailed it by itself, showing how powerful divergence with trend is. Look at all the divergence that fails against trend, right? Those are the novice traders trying to catch a falling knife. We're more knowledgeable than that. You've been educated better than that, and you know better. You know to short this, there. There's the next pullback to J signal, gets short, no divergence. Then bullseye comes in. Bam, here we go. The best divergence you can get right here. The best divergence you can get, let me blow this up so you can see this. This is the best divergence you can get, guys. It's called triple divergence. If I get a bullseye and I look down and I got two lower peaks from my original X point or my high peak. There's one lower peak, my two lower peak, higher high in price. This is called triple divergence. This is the best divergence you can get on J signal, period. And you're going to see tons and tons of trades on all markets with triple divergence. It's the best divergence. But I'm going to teach you right now that you need to just take divergence with trend. Look at the spread on my 5-minute trend filter, down big. If you're trying to buy this market, well, shame on you. Shame on you. Because you should not buy a downtrending market like this. We're not counter-trend traders in the room. We sell retracements with trend. That's a methodology. And I've trained hundreds and hundreds and hundreds of traders. Not one counter-trend trader has made money that I've seen. So you gotta stop counter-trend trading. And I know everybody's done it before. Stop it. Just stop beating yourself up. Sell retracements with trend, especially in trend markets. You're either going to trend 2 and chop 3, or you're going to chop 3 and trend 2. And when you get in these hard trend days like this, when the spread's big, then sell retracements with bullseye shorts. There we go. Gerald, roll over to gold. Gold did not disappoint this morning. Another one did not disappoint. Look at the spread on my trend filter. I mean, it's just, look at this spread. Huge spread. Telling you don't take any longs. That's it. No longs. Zero. So what we do is we look for the trend to roll over with the trend filter. There's your first fib short, but look at the bullseye short right near my line in the sand. Black line again. This is how the Russell 2000 was almost a $1,000 trade yesterday with a $100 risk. 10-to-1 reward to risk. Look at the breakdown, and then you get the retracement bullseye short. These J signals are coming up in the morning, and they're extremely accurate. It happened yesterday, the day before that. Day before that also, coming in the morning, before 7:45, you're getting these big push downs. If you come in, you see the trend hard down, pay attention to the bullseye trades. They're really, really effective. And there it nailed it again, 13.15. All right? So we have the built-in trend filter for you. This works on all markets. That's how we catch these. All right, Gerald, go back over to the oil, and we're going to shut this off in a second. Oil market profile, price profile. Let me know when you're there, buddy. You there, man? All right, thanks, man. Okay, the moving averages. Let's say you don't use J signal, all right, and you want to just learn the room system by itself first of all. Well, the first thing you do when you log in is you look at these 5-minute moving average right here. The 5-minute moving average is down. That tells me one thing. I've only got 2 setups with market profile. Count them. 1, 2. That's it. I don't have any other retracement setups with market profile. 2 setups to learn in the room. If the moving averages are down, I look at selling the first of these red dots right here. I sell 96.63 on the first test, or I sell 96.10 on the first test. Well, what if the market's too weak and I don't get to my red dots to sell high value area? That's okay, because I'm either going to sell J signal if the trend still keeps going down, or I'm going to sell what? I'm going to sell the breakdown and retest of LVA, number 3. Look at this. It broke 96.26. It retested 96.26. There is your sell on number 3. That's your sell on number 3. Okay? That's your sell on right here. It broke 96.26. It retested 96.26. Now let me show you something. Let me show you something, my friends. You know when that fib dot didn't come up? Let me show you how Q I am in with the market, how intact I am with the market. Watch this. You know when that divergence dot came up? That's okay. I mean the fib dot, guess what came up? You know it. Divergence with trend on the retest on the number 3. Right there. There's my number 3 setup, and I'm educating you. Only take divergence with trend. Check this out. Tell me I don't know what I'm doing here in the markets. I know exactly where these inflection points are. Check this out. There we go. Bam. Number 3, I got the retracement. I prefer a fib dot, but there's my divergence on a number 3 retest. Look at that. So not only am I taking that number 3 retest on retest of LVA, I got a number 3 short. So let's look at this. There's your first bullseye short. There's my number 3 setup coming after 745. There's another fib dot short. There's a bullseye, and there's a bullseye, triple divergence bullseye. You had 1, 2, 3, 4, 5 opportunities this morning on this big hard hit. 5 opportunities if you trade the method like I teach you. So you got to be patient. You got to have discipline, and then you just wait. You wait until the setup solidifies. Okay? That's all we do. Gerald, go over to gold one more time. If the market, like the bullseye called the low here on gold, it works on counters too. There's the trend change. There's the gold bullseye called the low, right? But don't take that. I know it's attractive. You're like, man, there's another one that worked. This works on counters too, the gold. But don't take it. Wait for trend direction. Gerald, shut it off, please. My point is I'm showing you how you can use both together.